Yeah, what's going on, everybody? It is Tuesday, December 5th. Heading to New York City tomorrow. A lot of crazy shit going on there in New York City. I think more so than any other place in the country. The South doesn't have this kind of stuff, these protests and these violent protests. And I'm happy to see that. But New York, I don't know. I'm going to see firsthand. Anyway, here's what I want to talk to you about today. First of all, yesterday was a $14.7 billion fiscal drain. A drain. Remember, we're coming into the December 15th tax drain. So we are going to have a pullback. See, when I talk to you people, I don't say we might have a pullback or we might have a rally. I tell you, I say we're going to have a pullback. And then the market's going to go up to new all-time highs. I mean, now there's some people saying, oh, the market's going to go up to new all-time highs. I was saying that from the beginning because I saw what the fiscal flows were. And I said, once we get through these seasonal periods where you get these drains, and I said there were two occasions where I qualified the outlook. And that was, when we had to raise the debt ceiling. I said if they raise the debt ceiling, the market rally is just going to continue, and the economy is going to be fine. And the other one was when I said they got to come up. Congress has to come up with a new continuing resolution at the end of at the end of fiscal year 2023, which was the end of last September. So I tell you, I don't say, oh, it might go up, it might go down, or it might stay the same. There's literally analysts who kind of. You could say that, maybe not exactly in those words, but that's literally what they're telling you. It might go up, it might go down, or it might stay the same. I tell you, I'm telling you right now, in the next couple of weeks with this tax drain, the 15th is next Friday. It's going down for a period of time, probably into the, December 2021, something like that, when we start to when we get through that, and then the flows start to build back up, the swimming pool water goes back up, and then we're good all the way into mid-February. But today what I want to talk to you about is, I'm going to go back to this discussion I was having with you guys last week and the week before with all those, remember, the Treasury Auction worry warts, I call them, the Treasury Auction I'm trying to think of a better term than worry wart. If somebody has it, please post it in the comments. And they were all like, oh my God, how's the Treasury going to sell $775 billion this quarter? It's the biggest fourth quarter, sales event, if you want to call it that, in history. Oh, who's going to buy them? Who's going to buy them, right? Every day on CNBC, this idiot goofball Santelli. It sounds like a circus clown, the great Santelli or something. Oh, look, the tail. We had an auction and the tail was 2 basis points more than what they thought it was going to be. Fuck people. Are you really? Is this really a thing? So anyway, I got some numbers here. I had to write it down because I wanted to give you the right numbers. So this is issuance so far for the fiscal year 2024, which, by the way, is only 2 months old. October, November, okay? And then we're talking about how you're going to sell $775 billion. Who's going to buy them, right? So far for the fiscal year 2024, again, only 2 months old, the fiscal year, October, November. Treasury sold 5.1 trillion of issues. 5.1 trillion, and this is all off the daily Treasury statement, okay? That was 685 billion of notes, Treasury notes, and 86.6 billion of bonds, and 3.61 trillion of T-bills. So most of the so-called financing, and again, I don't even want to use that term because then you guys are going to, I'm going to reinforce, if I use that term, then I'm reinforcing the wrong understanding into your head. Treasury sales are reserve drains. That's it. You got to put the water in the pool first before you could drain it out. So the water goes in, government spending puts the water in the pool, the sale of treasuries, drains it out a little bit so it doesn't overflow. If you didn't drain it out, what happens to the pool? It's going to overflow. It's going to go into your yard. Maybe it'll seep into the basement, into the house, into the neighbor's yard. You don't want that to happen. So a couple of things here. First of all, 5.1 trillion was sold in that's 2 months, folks. So you can multiply that by 6 for a year. That's 30 trillion, okay? Nobody's even going to pay attention to that number. And a small amount was 685 billion was notes and 86.6 billion was bonds. I mean, and 3.6 trillion, that's 71% of what was issued in the fiscal year so far, is T-bills, which goes to show you that the management of reserves can be totally accomplished by just selling short-term bills. You don't need to sell bonds. You don't need to sell notes. I mean, 71% of the issues, they're short-term bills. So, I mean, it's kind of ridiculous to even have this conversation, about bonds and who's going to buy the bond. I mean, the government's selling bonds just as a kind of a courtesy to investors that want to have, an instrument with some term, some duration. You don't need it. 71% of what was sold is bills, all right? Now here, wait a second. That's something in my eye. I give you the numbers for November. November was the month when, what's his name, Coccamelli, Santelli, and Leisman, they were every day on CNBC, fucking going nuts about, who's going to buy them. So in November alone, total issuance was 2.53 trillion. That's more than half of the whole fiscal year so far. Remember, the fiscal year is only 2 months old. 281 billion in notes and 41 billion of bonds. So hardly any bonds, and 1.8 trillion of T-bills. Again, you don't need bonds. You don't need notes. What's the point? Everything can be accomplished with the issuance of short-term bills because that's all you need to drain reserves. And you could see that right here from the numbers. Like 71% of all issuance is bills. It's not bonds. It's not notes. You don't have to do it. Why are they doing it? Why are they doing it? They're doing it what? As a courtesy to people who already have lots of money and institutions who already have lots of money to pay them a higher interest rate. I mean, basically it's like welfare for the rich. When you think about it, who owns treasury bonds? You don't got regular people, working people owning treasury bonds. You don't. I mean, when you think about it, when you really understand this, folks, you see how ridiculous this whole thing is. I mean, you could, if you want to help people, if you want the government, right, what's the preamble to the Constitution? Provide for the common defense and promote the general welfare for ourselves and our posterity, do ordain and establish this Constitution for the United States. That part of the preamble, promote the general welfare. Is that promoting the general welfare by giving these people who already have millions and billions of dollars basically welfare? And then cutting welfare to people who really need it? I mean, it's screwed up. But I'm not here to give a sociology lesson. I'm not here to give a policy lesson. I'm here to just tell you guys what the deal is. I'm just here to tell you guys what the deal is. And I don't want, because I know you guys, some of you tell me, well, I had this argument with a colleague at work, or had an argument with one of my family members or my friend about, he says, we're borrowing from China and this and that. And who's going to buy the treasury? What if nobody buys them? You did $5 trillion in 2 months. Nobody said anything. And interest rates came down. Rates came down. There wasn't any problem. And Santelli is talking, who's going to buy $775 billion? You did $2.5 trillion in the month of November alone. What are these people talking about? I mean, again, I have to say, it's not like, Mike Norman, he has some secret information that nobody else has. Why should we believe him? Who knows where his information comes from? It could be a shady source. No, it's published every day. These people like Santelli and Leisman and all these people on these shows and everything, and even these people, high levels on Wall Street who repeat this shit, this garbage. They have access to this. I don't have some fucking special security clearance or something like that. Like, I click on the website. It's right there for me to see. Treasury publishes it every day. You think they would do that? No, again, this goes back to they don't care, man. It's just like they got their story and they're going to stick with it. And that's it. And they're going to tell you, you better listen to us because we're very smart people. And we have a lot of money. I'm Ray Dalio. I'm a billionaire and I know what I'm talking about. And nobody's going to buy these bonds. Let me tell you something. And we're at the inflection point. Okay? And we're borrowing all this money, all these dollars that China is printing up in its factories. We're borrowing. Come on, folks. How long are you going to be snookered? How long are you going to be listening to these idiots? I'm asking you. How long are you going to be listening to these idiots? And how long are you going to allow people to talk to you and parrot out these ridiculous claims, ridiculous claims that are totally baseless and opposite of what the reality is. I mean, it's just a crazy world we live in, folks. It's a crazy world we live in. Anyway, that's it for today. Go to my website, sign up for a 30-day free trial of MMT Trader. I send out emails all day long, man. You need it. You definitely need it. I'll see you I don't know about tomorrow. Possible, but I doubt it because I'm going to be traveling. But definitely on Thursday. Bye.